how the market turmoil and U.S. government shutdown are hitting 401k accounts. Millions of Americans saving for retirement are facing a rocky moment as stock markets slide and Washington grapples with another government shutdown. For anyone with a 401k, the news may feel unsettling. Balances are shrinking, uncertainty is high, and many are wondering what this means for their future. Market turbulence hits retirement savers. The stock market has been under pressure recently due to a mix of economic worries, including inflation concerns, interest rate uncertainty, and slowing global growth. With the government shutdown adding another layer of risk, investors have pulled back, sending major indexes lower. Since most 401k plans are tied heavily to the stock market, these swings translate directly into retirement account balances. For long-term savers, it can be jarring to open an account statement and see hard-earned savings shrink. Washington gridlock adds pressure. The U.S. government entered a partial shutdown as lawmakers failed to agree on funding. A shutdown doesn't just impact federal workers. It creates ripple effects through the economy. Reduced government spending, delays in services, and shaken consumer confidence all feed into market volatility. Analysts warned that a prolonged shutdown could weigh even more heavily on the economy, potentially pressuring corporate earnings and stock prices further. What it means for everyday investors. Financial planners stress one key point: don't panic. Market drops are painful, but history shows that retirement accounts tend to recover over time. Younger savers, especially, may even benefit since they're buying more shares at lower prices through automatic contributions. For those closer to retirement, however, the volatility can be more worrying. Experts suggest reviewing your asset allocation, making sure you have a balance between stocks, bonds, and cash that matches your risk tolerance. Staying the course. While it's natural to feel anxious during a market downturn, especially when political uncertainty makes headlines, most retirement experts advise against making emotional moves. Trying to time the market or pulling money out suddenly could lock in losses that would otherwise recover. Instead, they recommend stick with your long-term plan if possible. Diversify your investments to spread risk. Focus on contributions. Continuing to invest regularly can smooth out market ups and downs. Bottom line, the combination of a shaky stock market and a government shutdown is a tough 1-2 punch for retirement savers. But history suggests that patience, discipline, and a long-term perspective usually win out. For now, the best move for most 401k holders is to keep calm, stay invested, and remember that downturns are a normal part of the investing journey.